Well, good afternoon, everyone. Thanks so much for joining us on our monthly webinar, January the 21st today. January has been a crazy month for us because of all these things that we're going to talk about today. So we figured we'd love to get together with all of you and talk about all the things that you need to be updating in your handbook, putting in your handbook, and all the changes that have come down the road this year. There's been a lot of them. So let's dive right in. We're going to talk a little bit back to basics here at first. What should go in the handbook and make sure the basics are covered. Then we'll go through all the changes this year and just kind of cover everything piece by piece. And of course, we'll have some time for questions at the end. So diving right in. So certainly I think everyone knows that an employee handbook is a really important piece of your HR puzzle. HR is more and more complicated and running a business is more and more complicated than it ever has been. So certainly having a good handbook, one, to protect you as an employer, but also to provide your employees with good information about what's going on out there and how you run your business. So, certainly we always recommend, take a minute and use your handbook to introduce yourself, introduce your company, what you stand for, who you are, why you're here, what you do. This is kind of their first impression generally of you. So take that opportunity to be able to show what that looks like. And then let's talk about your policies, right? So not every single one of these needs to be in a handbook. Some are more complicated, some are less complicated. Some apply to certain industries and others don't. I'm certainly a keep it simple, stupid kind of person. So I don't think that you necessarily need to overcomplicate your policies in your lives. Because remember, with whatever policies you write, you have to then enforce them and manage them and maintain them. So think about that as you are working through that. Just some kind of sample policies that we've kind of updated, in here. Standard operating hours, attendance policies, dress codes, breaks. Breaks are legally mandated, remember, so make sure you take care of those. You might want to have a cell phone policy. You may want to have a smoking policy, paid time off policy. In Maine, we know we have to have Maine paid leave, which we're going to talk about in a little bit. So that's certainly something almost everybody needs to have. And even if you're not required to follow that law, you may still also want to look at it and just figure out what you're going to offer for time off benefits. Any benefits that you're offering, certainly we know we have mandatory retirement now, so that's something that's you should talk to. But certainly if you're offering any insurances or other employee benefits or discounts, those types of things, you may want to think about what those look like. Certainly kind of performance and conduct, always speak to that. What are your policies and procedures for dealing with poor performance or poor conduct? A really big one that's happened the last few years is remote work and flexible scheduling. What does those look like? How do you handle that? And really important with that remote work is if you have employees working in other states, you need to be complying with all of the rules and laws in those states, not just payroll taxes, but rules and laws. So if you have an employee working in California, uh, gosh, love you, because California has about 30 million labor laws that you need to follow. Your employee handbook is going to become about 10 million pages, probably not that much, but lots and lots to think about as you're working with remote work folks. So if you are managing, through compensation or promotions or any performance kind of things about those, and certainly, kind of tied to performance, discipline and termination policies, certainly in the state of Maine, employees are at will unless you have a specific employment contract with them. But and then certainly there are a lot of legally required policies that you may have to put in there. Things like FMLA if you're over a certain size. Now we have paid family medical leave, the new PFML. We were talking a little bit about that today. Workers' comp. We talked about at-will employment. Non-discrimination, equal employment policies. Certainly, you want to be sure that you are having your employees acknowledge the receipt of this. And honestly, handbooks need to be updated at least once a year, if not more often, because look at all the things we're going to talk about today. They're changing faster and faster all the time. The legislature in Maine has just convened again for another session. This is their long session. The list of bills is too many to count at this point. We haven't had a chance to totally dig into them. I guarantee you there's going to be some employment related bills in there. One of them I anticipate seeing is pay transparency. I think that's going to be the next big thing to come to Maine. So certainly lots to keep an eye on. So this year, I think hopefully everybody knows minimum wage has gone up here in Maine. Certainly it went up in a lot of other states as well. If you are not in Maine, pay attention to where that is. what those are. Federal minimum wage still is 7.25. That hasn't changed since 2009, I think. But certainly be sure to keep an eye on minimum wage. So Maine's minimum wage went to 14.65 this year, and that is about a 3% increase from last year. Portland and Rockland both have higher minimum wages, so those are things to consider if you're in those markets. Our tipped wage in Maine this year is $7.33 an hour. And again, if you're in Portland or Rockland, they're at 7.75 for tipped wages. So not necessarily something you need to put in your handbook, but this is a big impact for a lot of particularly hospitality businesses, and certainly something to keep an eye on. As we see the minimum wage tick up over time, I think everybody can speak to the fact that overall wages have increased as part of this, because folks don't want to be making $15 or $16 an hour when minimum wage is only $14.65. So those jobs that were $15 an hour a few years ago are probably pushing close to $20 an hour at this point, because of the rise that's gone along with those. So certainly a driver to rising wages in the state. The salary threshold. So this is something we pushed a lot of in the last half of the year. The salary threshold was set to go, Federal Department of Labor was set to increase this to 11.28 per week. This was a big deal. This was a huge jump from the previous thresholds. It was going to really have a big impact for a lot of employers. About the third week of December, this was struck down. This is no longer going to affect as of January 1st. So as of today, the salary threshold for Maine employers is $845 per week, and that is a weekly calculation. It's not based on that $43,000 annually. It really is $845 per week. So that's something you may want to keep an eye on for your salaried folks. So this is only certainly one piece of the salary threshold, salary test that needs to happen. So certainly we know there are duties tests that need to be met. There's the executive, administrative, and professional duties. And then there's also the wage test in order to be a salary exempt employee. So all the hubbub we were causing about that big jump has not gone where we thought it was going to go. Federal Department of Labor, that was struck down by a judge in November, and that was something that's not happening now. Given the change in administration, I doubt that they're going to fight this moving forward. So I would say we're safe to stick with the Maine salary threshold, which is currently higher than the federal salary threshold, and that's why we use that here in Maine. Overtime. So this is certainly something you want to address in your handbook. Certainly overtime is, on a simple basis, is time and a half for any hours over 40 hours. So that's the federal law, that's the Maine law. There are certain states and local jurisdictions that may have a daily overtime. So that's something to keep in mind. Some others may have different overtime periods. Here in Maine and in the federal level, it is 40 hours in any 7-day period, and you do have to set your overtime period. So have to be consistent with that. We talk a lot about the tipped rate. Again, for hospitality folks, it's not time and a half of the $7.33 an hour tipped wage. Actually, the way the calculation works is you take the full minimum wage, multiply it by 1.5, and then you actually get to take that $7.33 tip credit. So as it works out, this is not how it works out all the time and in every state, but this year, and as it's been consistently in Maine, the tipped overtime rate for tipped employees is essentially the minimum wage. Now, if you have folks working in different job roles, or if you have people that are earning other non-discretionary income like commissions or service charges, those will need to be used and calculate what's called blended overtime. And blended overtime takes all of your compulsory payments and all of your wages, and it takes that and blends it. And then the overtime rate is calculated based on that blended overtime rate. If you've ever had to do this, it is not so much fun. It gets very complicated and very confusing, especially if you're on a biweekly pay period. So if you have questions about that, take a look at the blog, certainly reach out to us. We do this by default for most of our clients that it applies to. But if you have questions, always feel free to reach out and chat with us. But again, this is something that I would be sure you are calculating and mentioning in your handbook, because this is certainly something that's important. The big topic this year for our clients, for most of our clients, is paid family leave. Paid family leave was enacted into law about 18 months ago now and has just now been implemented the first of this year. It's been a very rushed rollout, I would say, from the state. There have been a lot more questions than answers until very recently, as 6 or 8 weeks ago. But basically, if you have any employees working in Maine, you are required to participate in this program. There are no carve-outs for seasonal employers. There are no carve-outs for certain industries. If you are a single member S Corp, you still have to contribute. There are very, very, very few carve-outs for these. So if you have employees working in Maine, you must participate. Okay. This is based on the wages that are paid. Employers with 15 or less employees can deduct a 0.5% payroll tax from their employees. If you have 15 or more employees, you must also contribute a 0.5% on your own. Okay. The employer, regardless of whether you have 15 or more employees, can contribute the employee's portion. So if you wanted, you could say, I'm going to cover my employees 0.5%. Okay. So that's certainly something that you can do regardless of whether or not you have 15 or more employees. But if you have more than 15 employees, you're on the hook for at least 0.5%. Okay. That 15 or more employee count is a little complicated. So if you have questions as to whether or not you're over that, give us a buzz and we can run some reports for you to show you what that looks like. These wage reports and payroll payments do need to be made to the state quarterly, and we will be taking care of those for our clients. We've already started to do a lot of work. I'm sure you've heard a ton from us on that. And right now we're in the mode where we're asking everybody to go out to the state's website and file or get set up with a PFML account. So I'm sure you've seen lots of emails and communications from us about this, but if you haven't done it already, please go create an account on the state's website. The link is here. And then once you get that ID, we need your account number, your account ID number, and put that into this form, papertrails.com/PFML ID form. That's how we're going to know to update your account with that new ID so that we can make the payments and file the quarterlies on accurately this quarter. So you do have to let your employees know about this program, and there is a new labor law poster that needs to be hung as part of this, and we'll talk about labor law posters in just a second as well. So we've talked a lot about paying into the paid family leave program, but what about using it? And certainly this is something that's going to have an impact on your policies and your handbook, and something you're going to have to think about over the next 16 months or so. So right now we're in the funding stage of this program. So employees and employers are contributing to this program over the next 16 months. Starting in May of 2026, employees can start to use this. And essentially the formula is pretty complicated, but in most cases, they can get up to 12 weeks off at 90% of their pay if they're not over the state's average weekly wage. So lots of really complicated things that go into that. But essentially, you can take this off for personal sick time, taking care of a loved one, and so forth as part of this, taking care of a child, a newborn, things like that, or for adoption. There's all the things that you can use this for. It's essentially a short-term disability policy. So if you have a short-term disability policy today, you're really going to want to think about how this is going to interact with your current short-term disability policy. And I really would encourage you to have a conversation with your benefits broker sooner than later. There is a provision for you to have a comparable plan, comparable short-term disability private plan in lieu of paying into this program. That does not start until you can't even apply for that until April. And I was talking to our benefits broker just this week, and the state insurance board has actually issued a notice saying that they do not want any of the insurance companies issuing quotes or policies that they think will meet these qualifications. So kind of a freeze on things right now, but certainly, have that conversation with your benefits broker about how you're going to handle that. Once that comes out, you're going to have to figure out how do you manage your handbook with your current policies, right? Are you replacing your current short-term disability policy? Do you have leave policies today? Do you have a parental leave policy today that you need to adjust and adapt to the state's requirements? Perfect example, at Paper Trails, I always allowed my employees 8 weeks of time off. Now with the state plan, I'm going to have to offer them 12 weeks for a new child or adoption. So that's something that I have had to change in my policy to align with the state's plan. Now I don't have to pay for it anymore, right? Because under the state's paid family leave program, they're going to cover that. But certainly I need to align my handbook to the new policies and the way that things are going to work. So certainly lots to consider with this new program that is being rolled out right now. So some other things to consider, these are not necessarily things that you want to update in your handbook every year, but you may want to mention them. Typically, anytime there's a rate change or things like that, These limit changes and rate changes happen almost every year. So if you're talking about your retirement plans or anything like that, or reimbursement rates for mileage, you may want to say, at the current year mileage reimbursement set by the IRS, or the current year deferral amount set by the IRS, and so forth. Mileage has gone to 70 cents a mile from 67 cents this year, so a 3-cent jump there. Certainly that's something that's changed. Lots of retirement changes this year. Secure 2.0 is fully going into effect this year. It's been trickling in the last couple of years. There are some changes to the rules for 401ks, for simple IRAs. There's a new jumbo simple IRA, which a lot of folks may not have heard of. Essentially, with the new jumbo simple IRA, you can contribute 110% of the 2024 maximum, which is it's kind of frozen in time. It doesn't change every year, which is a weird provision of it. But if you have less than 25 employees, or if you have 26 to 100 employees and are doing a higher match, you can put into 100%, 110% of the limit on that. We're going to show what that looks like right now. So if we look at it this year here, the 2025 limits. So for those of you that want to max out your retirements, these are the limits. So simple IRA, the standard limit, 16,500. That went up $500. And if you are eligible for that jumbo limit, you can put 17,600. Now here's where it gets even more confusing. They have now tiered the catch-ups on both simples and 401ks. So there's a special carve-out for folks 60 to 63 with a little bit higher catch-up limit. Okay. So the standard catch-up for those 50 to 59 and 64 plus is $3,500. That does go up a little bit more to $3,850. Again, that's that jumbo limit. And this is actually, the jumbo limit is based on the 2024 limit. So we're kind of mixing years. This is a really funky provision, but it's certainly something that folks have been taking advantage of and might want to take advantage of. Then there's the catch up for those folks that are 60 to 63 only. And that is if you turn 60 to 63 in those years, you are eligible. If you are 59 or 64 in those years, you are not eligible. You go back into the other category. And then again, those are based on the years when you turn 60 to 63. Okay. Excuse me. Same thing, 401k, 403b, 457 has gone up 23.5 this year. No jumbo exclusions in here. That's only for simples. The other thing that we didn't talk about is there is now a Roth option for simple IRAs this year, starting this year for Secure 2.0. So if folks want to participate and put Roth contributions into a simple IRA, that is now available as well. So talk to your financial advisor about that. Again, here we go. We have that 60 to 63 limit. This is new and has changed. This is this year to Secure 2.0 in there. So keep an eye on those. And certainly if you're doing a traditional IRA or a traditional Roth IRA, $7,000 is the contribution limit this year. That is what Merit, Maine's retirement program, that's the limit for those this year. So lots of funky things going on with Secure 2.0. This certainly impacts your handbook, but it also impacts things you should be talking about with your financial advisor as well to continue to do that planning. So remote employees. So this is definitely a sticky wicket the last few years. We've had a lot of folks caught flat-footed as they have employees moving all over the place. Remote work has been a wonderful thing for employers and employees alike in a lot of ways. There's also a lot of challenges that this presents for remote employees. And the most common thing that you have to figure out and that impacts us is your payroll taxes. So state income tax, unemployment tax, paid family leave tax, local taxes, workers' compensation, those all have to be set up in the state where the employee is working. You further have to manage all of the local laws that are there. So if there's minimum wage, paid family leave, paid transparency, benefits laws, earned paid leave, retirement, labor law posters, anything you need to manage in that state, if you had a location in those states, you have to manage all of that for your remote employees. So really think about that before you say, hey, Susie wants to move to Florida and work remote. You might want to think about how that's going to work and what the mechanics of that are going to be and what additional costs and headaches are going to be there. You really need to be thinking about that because it is expensive. We have remote employees, and I had to change workers' comp companies twice because we had employees in states that our workers' comp company didn't cover. So that changed the whole, piece for us with that. You really also need to go in and update your handbook to go along with all of these state and local laws. So there are things, again, we have a Florida employee at Paper Trails, and there's civil air patrol leave is something we had to add to our handbook to cover our Florida employee. Something totally strange, but needed to be added in there for us to be compliant. Now, I don't think my one employee in Florida is going to ever go on Civil Air Patrol leave, but it's something we have to handle because it's certainly one of the laws in that state. So keep an eye on that. The other big thing that business owners don't think about when you are sending employees to other states is the nexus that it's creating for sales tax, local tax, income tax. These are things that you really need to think about and talk to your accountant about, because you could have to pay taxes in another state because you have an employee generating revenue or doing work for you in those states. If you have clients in those states or that your customers, your states, it's becoming more and more complicated to handle those. So really have a conversation about that with your accountant as well. Other things to think about, you're going to put in your handbook. How are you going to handle the expenses associated with an employee working remotely? Are you going to give them a reimbursement for their internet or their electric bill? Are you going to provide them with other reimbursements for supplies and things like that? Think about that in terms of the taxability of that as well. We see a lot of folks that say, hey, I'm going to give you a work from home stipend. Well, that's actually taxable income. If you're going to give someone $250 a month to cover whatever you say it's going to cover, that's not a pre-tax, untaxable benefit to that employee. That needs to be taxed. And that's something we would do through payroll for you. If you're going to do a reimbursement for something direct, it has to have a direct impact on your business, and you would have to be able to deduct that as the business normally. So really consult with either us or your accountant on how you're going to handle those reimbursements and document that process in your handbook. Other thing to think about is, how do you handle security, information security, confidentiality, all that stuff for your employees working remotely? You really want to think about that and make sure you document that, because when things hit the fan and you've got an issue, you need a policy to go back to and how to handle that. So just going back, it's been a busy few years for our main clients. Lots of changes have come through here. So, certainly lots of things to think about. I'm going to go through just some of the most recent law changes that have impacted our clients. Most of our clients are pretty well up to speed on these, but I just want to refresh you, make sure you have an idea of these. Maine's earned paid leave law, this requires if you have 10 or more employees, you must allow your employees to accrue 1 hour for every 40 hours worked, up to 40 hours in the current year. They do have to be able to carry that over, but they don't have to be able to accrue another 40 hours and so forth for next year. So lots of nuances to this, but it's a minimum requirement. And this does have to be allowed to be used for sick, vacation, personal, emergency time, anything like that has to be used for. So this is the minimum standard for paid time off. You certainly can have something more generous, and most employers do, but you have to allow at least the minimum requirements of this to be there. And that includes what they can use their vacation or their time off for. So you have to allow at least a specific bucket of time for them to use for basically any reason, okay? So if you just say, hey, we have vacation time, and you can't take it for sick or for personal or anything like that, that does not comply with Maine's earned paid leave law. So that's something to think about. When we're helping our clients set up PTO tracking within the system, the first question we ask is, we want your policy. So, we want to make sure that we're setting this up to meet your policy. And certainly that's something we're going to ask for. So be sure whatever your PTO policy is, one, it meets with Maine's paid leave law requirements, and two, is easy to manage and understand for tracking purposes. So the year after Maine rolled out earned paid leave, they basically said now there's a vacation payout requirement, which essentially is in contradiction with the earned paid leave law, because earned paid leave law says you do not have to pay out earned paid leave when an employee leaves your company. However, if you have a vacation policy, you must pay that out. So if you have 10 or more employees and you have a policy called vacation, you have to pay that out to the employee regardless of the reason that they separated from your employment, okay? Only a vacation policy. It's a total loophole that you can say, hey, I just have a PTO policy. I don't have to pay it out anymore. The legislature knew that this was in contradiction to Maine paid leave. They knew that there's a huge loophole you can use to get around it, but they took the win in the newspaper article saying, hey, we're doing things for Maine workers, and making sure that the employers pay out vacation time. Now, again, lots of holes in this policy, but it is a policy and a law nonetheless. Make sure you address that in your handbook. Maine's retirement investment trust. So private businesses with 5 or more employees must now offer an employer-sponsored retirement plan to their employees. If they do not offer things like a 401k, simple IRA, those are the most common. If they do not have that option, they must enroll in the state's plan, which is called Merit. And it is a Roth IRA contribution. It's an opt-out plan. So essentially, if you are enrolled in Merit, your employees, if they don't sign the little form that says, I do not want to be in this program, you have to put 5% of their pay into Merit immediately. Okay. So that is something to consider as well. That rolled out last year, 2024. Starting this year, the state has said they're going to start imposing penalties on these folks. At last I heard there was something like 30,000 businesses that the state thought were not in compliance with Merit. My guess is the majority of those are folks that were just didn't say, hey, we have a simple IRA or 401k. They're going to really go after folks this year, and there's penalties associated with that. So keep an eye on that. If you're not offering retirement, let's chat and figure that out. Severance pay. So certainly if an employer has a facility with more than 100 employees at it, you have to manage the severance pay laws. You have to pay a severance to them. Lots of rules around this. There's notifications, all that fun stuff that needs to be posted and managed through that. So if you have more than 100 employees and you're thinking of laying people off, you're going to need to look into that. Tip pooling is something we hear a lot of. Basically, tip pooling is allowed. However, if you are going to include non-tipped employees, things like kitchen staff, things like that, essentially everyone has to be paid at the full minimum wage. You cannot use the tipped wage and include non-tipped employees in that pool, okay, first of all. So that's the big thing. The second thing, managers, supervisors, owners are not allowed to be in a tip pool at all in any way, shape, or form. If you are a shift supervisor, if you are a manager, you are an owner, you cannot be in a tip pool, okay? You can earn your own tips. So if you're the owner of a company or the manager of a restaurant and you work a bar shift, you can keep your own tips. That's not disallowed, but you cannot participate in a tip pool in any way, shape, or form, whether or not you were doing tip producing work. So that's something you really want to address if you have a tip pool. There are a lot of things to consider if you are working on a tip pool. So, really let's chat if you are. Workplace safety. So these are items that need to be in your handbook regardless. So if you have 15 or more employees, you must provide annual sexual harassment training and get sign off from every employee every year. There's also a video display terminal law that basically says any employee who spends 4 or more hours on a computer must comply with this law. So that is almost every office type job. Certainly there's questions about other, blue collar type jobs, but that's certainly one that needs to be there as well. There are certain high risk industries that have OSHA requirements as well. So keep an eye on those for annual training requirements, things that you might have to look at. Labor law posters, not something that most people think about, but it is something that needs to be taken care of. These do need to be posted prominently. And again, for your remote workers, they have to have access to those labor law posters for the jurisdictions where they work. And that could be a lot of things. These change often. They're not just changing once a year anymore. They are changing sometimes multiple times a year. We do have a labor law poster service that we can enroll you in if you'd like, that we will issue all of the new labor law posters when they are published. You'll get those, as soon as they're published, usually within 30 days or so. And we'll send those out to you and manage all of that. If you have remote employees, you can offer them digital copies of it. It has to be easy to access. And we actually have an integration where we can set that up with an iSolve. So if they log into iSolve, they can click see my labor law posters, and they will see the labor law posters for all the jurisdictions for where they work. So that's something that we can do as well. Paid family leave poster did get updated this year. That's brand new. That needs to be posted. If you go to our website, there's resources on how to get all that stuff as well. Certainly the minimum wage poster updated. I think there was a couple other posters that updated this year as well. So make sure you're always staying on top of that as well. We've got a ton of resources on the website, paid family medical leave, papertrails.com/PFML. We have a full guide, full instructions on how to get registered. So much on there. We are always publishing new things to the blog, so keep an eye on that. Lots of articles there. If you ever have a question about something, go search it. Chances are we've answered it. So that's something to think about as well. Certainly, as always, we always like to give you a reminder if employees are having a hard time getting logged into iSolved or troubleshooting or forget their password, they can go to papertrails.com/help and get all the resources they need. We have step-by-step videos on how to reset your password, all that fun stuff. And lastly, don't forget to follow us. We're all over social media, Paper Trails Payroll. We are on LinkedIn, Facebook, Instagram, YouTube. This will be posted on YouTube tomorrow. So for all of you that want to watch it again, and we are on the infamous TikTok. We've survived that ban as well. So we are on there too. So check us out. Next month, we have an exciting one, something we're going to try new this year, kind of getting the Ferrari out of first gear. We kind of call iSolved our Ferrari. It goes really fast and is really shiny and does a lot of fancy things, but a lot of our clients don't necessarily know how to use all of them or know that things are even there. So next month, we're going to talk about all the things that you can use within the system to make your life fast and furious. It'll be fun, February 18th. I'm happy to entertain any questions on all this stuff. I have a couple in the chat right now. First one, can a salaried employee work less and be paid less, or should they be switched to hourly? So the first thing about that, by definition, employees should, salaried employees work a set number of hours. Now, certainly there's some variability in that. If they are consistently working fewer hours and you want to prorate their salary, there are rules for that. If they work even 1 minute in a day, they must be paid for the full day. So if someone works 4 days, you could prorate their time to a 4-day period if you really wanted to. But if they work even 1 minute on that 5th day, you must pay them for that 5th day. So that's something to consider. If you have someone with really variable hours and you are constantly doing adjustments to, one, keep yourself sane, and two, keep the auditors and regulators sane, I would switch them to hourly. We have a question to confirm. You're saying that PTO does not need to be paid out on separation. That is correct. If you have a plan called PTO, called earned paid leave, called sick, called personal time, called anything other than vacation, you do not need to pay it out in the state of Maine. So other states may vary, but in the state of Maine, the only thing you have to pay out is if you have a plan called vacation. Maine earned paid leave, not accrual, but each employee gets 2 weeks that refresh on January 1st. Any annual payout. So Maine paid leave is 1 week per year. It's 40 hours. They have to be able to accrue up to 40 hours. Okay. 1 hour for every 40 hours they work, essentially 0.025 hours per hour worked, up to 40 hours per year. They do have to be allowed to carry over any unused time. Okay, so if they have 30 hours on December 31st and on January 1st, they can continue to accrue up to 40 hours the next year. So it's not like they get 40 more hours in the following year. They're only going to get 10 more hours. So they can't use more than 40 hours in a year, right? They can only get up to 40 hours. But if someone carries over 40, 40, 40, 40, 40, they're always going to have 40 hours. Under Maine paid leave, you do not have to pay out. Okay, no payout for Maine paid leave. Can a salary employee also be tipped out? A salary employee could be tipped out, assuming they are not a manager. They could be in a tip pool, but if they are a manager, which I guess to be salaried you'd have to be because they're given those administrative exemptions we talked about earlier. By definition, a salaried employee, I would assume they are a manager, so no, they should not be getting tipped out. They should not be getting included in a tip pool because they are a manager or supervisor of some kind. So yeah, and they're a manager, you said. So yeah, no, if they're a manager, they cannot be tipped out. They cannot be regardless of whether or not they're salaried. If they're a manager, they cannot be tipped out. They cannot be tipped out. They cannot be in a tip pool. And I have one question from the very, very beginning. I guess the employee benefits, unconventional employee benefits webinar on May 20th. The link on the website is not working. John, I know you're listening. If you could fix that. Lamar, if you check that in an hour or so, John should have fixed that. If you don't, if it's still not working, shoot me an email, chris@papertrails.com, and we'll dig into it a little bit further. But John will have fixed that webinar registration for later this month. If a salary employee works 1 minute of a day and leaves, we will of course pay them, but can we make it make them use PTO. Yes, you can. So the question was, if someone comes in, works a minute, and goes home sick, for example, you can make them use 8 hours of PTO. Any other questions? We're certainly always happy to help. You can certainly reach out to anybody on our team as you're, thinking about these things. This will be emailed out tomorrow once we get it all posted. It'll get posted to YouTube. We'll send out recordings and the slides and so forth for everybody. But certainly we look forward to answering any other questions you have, and feel free to reach out with those questions. And otherwise, we'll see you next month. Thanks so much.